Welcome to Earnings Central. In this video, we'll break down Ciena's fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $1.1 billion. The company actually reported revenue of $1.12 billion, surpassing expectations by 1.8%. This quarterly revenue marked a slight decrease of 0.9% compared to the $1.13 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was 65 cents. The company actually reported an EPS of 54 cents, falling short of expectations by 16.9%. This result also reflects a significant 28% decrease compared to the 75 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. First up, gross margins. The company faced some challenges, reporting a 41.6% gross margin, which was lower than expected due to a larger than typical $39 million provision for excess and obsolescence inventory. This one-time charge impacted their margins, but management believes it's not a recurring issue. On a more positive note, Ciena crushed it with their book-to-bill ratio. For 2 consecutive quarters, they've achieved a book-to-bill above 1, meaning they're booking more orders than revenue. This is a significant turnaround from previous expectations and signals strong demand for their products. Their backlog tells an equally promising story. The company ended the year with a $2.1 billion backlog, growing by approximately $150 million in the second half of the fiscal year. This provides a solid foundation for future revenue. When it comes to operating margin, Ciena is making steady progress. They delivered a 10% operating margin in Q4 and are targeting 15% to 16% by fiscal year 2027. This demonstrates their commitment to operational efficiency and leveraging their investments. Cash flow generation was another bright spot. In Q4, they generated $349 million in cash from operations and $266 million in free cash flow. For the full fiscal year, they generated $378 million in free cash flow, showcasing their financial strength. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The most exciting theme is how cloud and AI are dramatically driving bandwidth demand. Management believes bandwidth growth, traditionally around 30% annually, will rise even higher in the coming years. Cloud and AI are now the primary drivers of network infrastructure investments. Ciena is positioning itself as a technology leader in optical networking. They've launched WaveLogic 6 Extreme, positioning themselves as the only provider of 1.6 terabit capable coherent modems in the market. This technological edge is crucial in attracting and retaining customers. The company is also aggressively expanding its market opportunities. Beyond their core business, they're looking into data center applications, metro routing, and broadband access. Their strategy involves leveraging their optical technology expertise to enter new market segments. Their network deployment strategies are evolving. They're working closely with both cloud providers and service providers, helping them plan and execute complex network infrastructure projects. This includes everything from submarine cables to AI-driven network expansions. Looking ahead, Ciena is incredibly optimistic about future growth. They've updated their long-term guidance, now expecting 8% to 11% average annual revenue growth over the next 3 years. This is driven by continued cloud and AI investments, service provider network upgrades, and their expanding market opportunities. The company's confidence stems from their strategic investments in technology and their ability to adapt to changing market dynamics. They're not just reacting to market trends, they're actively shaping the future of network infrastructure. That wraps up our recap of Ciena's fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.